Hey, what's up, everyone? Dan Rivers here, Rivers Capital Group. We're going to do a deep dive market update since we're about 6 months into the year so far. So I really want to do a deep dive, kind of show you the trends, show you what we're seeing. The cool thing is I actually just got back from a conference in Nashville last week, and Avery Carl, she is the founder of the Short Term Shop, which is they help buy and sell short-term rentals throughout the country. And she gave a market update, and a lot of the stats that she was saying was very similar to this. And I'm going to start off with this one. A lot of people are worried about, hey, the market's, we're seeing some signs of it shaking. We're seeing some signs plateauing. And yes, that is the truth. Over the last probably year and a half, 2 years, our market has kind of stayed stagnant. We're seeing inventory slightly grow. We're seeing rates hang in there at the high sixes, low sevens if you're an investor. Right now, we are in that market, even though technically, when it comes to absorption rate, we're in a seller's market. We are in a buyer's market right now. The buyers have all the power. But yeah, so I just wanted to show you some stats to make it so you can see what's going on and hopefully not panic. Some people are getting you in a worry, say, oh, we're going to see another 2007, 2008 crash. You got people giving all these their predictions. I'm not going to do any predictions here necessarily, but I'm going to kind of give you just an update of what we're seeing, what trends we're seeing, and what you can expect, and maybe some signs to look at. So first and foremost, one of the most important things is that 83% of people have a sub 6% interest rate, 70% are sub 5%, and then it's somewhere around like 50% or so that's sub 4% interest rate. That's important to know because when you have a 6.8% interest rate right now, let's just say that's the rate most people may get on their primary mortgage, the people that have a 5 or below interest rate are not making a move unless they have to. And we're seeing that. We're seeing homes kind of sit on the market longer. Over 50% of homes are sitting on the market 60 plus days. Homes are staying a little bit stagnant. But I was listening to a Bigger Pockets episode the other day. Nationwide, we're seeing this trend where there's certain pockets, we all know this, Florida, Texas, California, where the values have kind of come down a little bit, maybe like 3 to 5%. However, one of the differentiators are in 2007, 2008, 2009, when that was happening, people had mortgages for 130% of the value of the home, and they didn't have equity, they didn't have these low interest rates, and they had to sell. Places like Tampa and a few other spots in Florida, as well as Texas right now, we're seeing the home values kind of go down about 3 or 5%, but the listing data is also showing listings are going down because someone, rather than selling their house for less of a value, they'll just pull it off the market and wait to sell it because they don't have to sell. Again, 83% have a sub 6% interest rate. Unless they have to sell, they're not going to sell. So we're seeing that trend go throughout the United States. We're seeing listings. I mean, you're getting into the middle of the summer, going into the fall, you usually see listings decline anyway. We're seeing that already in the markets that are getting hit kind of on that value-wise. So let's hop into here real quick. You'll see this is a median sales price. As you can see, it was about 260, 275 in 2018, 19, 20. And you'll see, obviously, everybody knows 2020, 2021, 2022, and right around 2023, it stabilized. But what I wanted to point out here is you'll see from 23 to 25, we've had that about a 8 or 10% increase over a few years. So about 2 or 3% a year on that valuation. So that's pretty standard when it comes to these types of markets. But I think one of the most interesting things I really want to point out, we'll go to days on market. We're going to show you days on market, new listings, closed listing, pending listings, and you're going to see a similar theme kind of throughout. So you'll see in 2015 through 2020, your days on market went anywhere from about 30, 32 or so to maybe like 15. So 15 to 30, and all depends on what time of year you're looking at. And then obviously we saw, again, 2021 through about mid-2023 where everything just kind of flew off the shelves. You had to make all these crazy offers. And what we're seeing right now is everything start to stabilize. Again, if you look at 2015 through 2020, those trends, I mean, it's pretty much the same. You'll see it obviously depending on if you're in the fall, spring, how the market's looking, but it bounces from that 17 or so to 32. It's the same thing here. It's actually bouncing from about 20 to 30, 33. So we're seeing it kind of, at least the trends that we're starting to see, and we're going to show it on a few other slides, of it stabilizing. In 2025, we'll see how 2026 looks, but if it stays on this track, we're just stabilizing and going back into a normal market, which it seems to be looking like. Again, I'm not predicting the future, but it's just, again, looking at these charts, this is what it's looking to do. Do you want to go to maybe homes for sale or month supply? Again, homes for sale. You had about 6,000. This is a healthy market. I don't know if anybody was in 2018, 2019, 2017. Hey, go ahead and buy. We have a very healthy market where it was about a 5 or 6% absorption rate, which is a very healthy market where it's not necessarily a seller's or buyer's market. It's pretty stable. And we're just seeing that exact trend kick back up. We're a little over 5,000 homes for sale here in Charleston. This is Charleston specific. and we're seeing it kind of stabilize again. We're still well under, we're about 1,000 homes under what it looked like from 2015 to 2020, but we're seeing that starting to stabilize again at that 5,000, maybe going closer up to 6,000. And there's one point I want to make here. 6,000 homes was a 6-month absorption rate in Charleston back in 2015 to 2020. It's a lot different right now because we have probably about $150,000 more people in the Charleston Tri-County now than we did back then. So you're going to need more homes on the market for it to really stabilize and become the same type of market as it was in 2015 at 6,000 homes for sale. Let's go to maybe closed listings. Again, you're seeing it here as well. That 2015 to 2020, your closed listings line, very similar to 2024, even the end of 2023, 24, 25. We've seen obviously the spike for those 3 years, and then we're seeing that trend just come right back again. This is another important one because I know a lot of people, there's homes in the market. There are a lot of buyers out there. We actually have year over year, there's more buyer applications being pulled. It's just that we have a little bit more inventory. Buyers are being a little bit choosy, and they're also being a little hesitant on buying. But you'll see it took about 12, anywhere from about 9 to 12 showings per listing to sell a house. These are obviously skewed because it was buyer's hot market. There's 50 people looking at a home and 10 offers at a time. But we're seeing it, even right now, we're still showing. I mean, we're 7 to 9 shows to pending. Right now, I know it's a little bit harder to get a showing. Any listing agent out there, any flippers trying to sell homes right now, it's a little harder to get some of these listings, but that's why it's super important to price it right. It's super important if you are flipping a home to stage it, to take the proper pictures, to market it properly, to work with a real estate agent that knows what they're doing. It's no longer, hey, I could just throw a house in the market and it's going to move. You got to have understanding of people that are actually looking at market trends, data, and really do deep dives into where the market stands. Sorry, I had one more note that I wanted to bring up was, I think, again, we'll see what the future has in store for us. But at that event in Nashville, one thing Avery Carl was talking about was not political at all, but Trump has put over 207 laws and changes in place to help the real estate market. Good, bad, or indifferent, doesn't matter what your opinion is. Bottom line is he's doing everything in his power to help real estate. Will that equate into interest rates going lower, whatever the case is there? We will see. No one can tell right now. But you have an administration in office that's actively trying to help move the real estate market. Not necessarily because of real estate, but with rates being as high as they are, it makes it a little bit harder to pay back the national debt. So that's one of the factors that I know is prime right now because we all know the national debt is very high. But how does that affect you? Again, not political views aside, when you have an administration helping out with the real estate, that is not a bad thing for real estate and trying to get it moving back in the right direction. We'll see what all that, we'll see what happens with that. But I think that's very important just to watch what's going on the political end regarding what laws and what things are being passed, such as the big beautiful bill. We're also trying to see how's the economy doing. If the economy stays at 4.2, 4.3, if it starts going over about 4.5%, I'm not an economist, this is just off all the data I've looked into, you might start to see, usually they'll start to lower rates or look into lowering rates if the economy starts to shake and the jobless claims start to increase. So there's a lot of factors that are going to be involved to see how the future holds out, and we're not going to predict that, but what I am trying to tell you is that all the charts and data are showing that we're stabilizing and kind of becoming the norm again for 2015 to 2020. And that's not a bad thing. It'd be nice to just have a nice normal market for a little bit, whether it's big spikes up or hits down. Like, I think everybody just wants a little stabilization for a few years. So I think if we see the interest rates get back down to that 6%, especially in the fives, but that 6%, I would be shocked if we don't see buying activity really spike. So if you're thinking about buying, I truly think now is a great time to buy because there's homes on the market, more homes on the market, more supply, less competition. And if you can have more supply and less competition in any product or service that you're trying to buy, of course, you're going to have more negotiating power. So now's a great time to buy. And one last thing is looking at the shows per listing. You're just seeing, again, you're seeing it stabilize. Yes, we're seeing a lot less showings, but it's really just stabilizing. It's not that 2021, even through 2024, it's just coming right back to right around that 2015 to 2020. So we'll continue to take a look at this trend. We'll do another market update at the end of this year or early next year to show you how the last 6 months finished. But we are going into a fall. A fall usually slows up. A fall usually you'll see values go about 2 to 3% less than the spring. So just we'll track the data. The most important things to do is, number one, hop on this newsletter and we'll give you a monthly data update on what's going on in the Charleston market. But number two, follow what's going on with the economy, follow what's going on with jobless claims, follow what's going on with the 10-year bond to see if that's adjusting, follow what's going on in inflation. Those are a lot of the factors that are going to see how this real estate market kind of, what it moves to and what trends we're going to see. But yeah, we'll keep you up to date on our end.